You've probably heard the phrase, "You've got to take big risks to get big rewards." But what if that's completely wrong? The truth is, the most successful investors don't gamble their way to wealth. They follow a precise order, a step-by-step ladder that builds money safely, predictably, and consistently. If you're trying to grow your wealth but fear losing your hard-earned savings, this is the video you've been waiting for. Because today, we're breaking down the right investment order to build wealth without taking big risks. Before we dive in, make sure to subscribe to Passive Income Pro and turn on notifications because financial freedom isn't about luck. It's about strategy, discipline, and making your money work in the right order. Now, let's get started. Build the financial foundation first. Before you even think about investing, you need a foundation because no investment strategy works if your financial life is a mess. So, the first move isn't buying stocks or crypto, it's building stability. That means three things. Emergency fund. Save at least 3 to 6 months of living expenses in an easily accessible account. This is your safety net. If your car breaks down or you lose your job, this fund prevents you from dipping into investments or going into debt. Pay off high-interest debt. If you're paying 20% on a credit card, no investment will beat that return. Wipe out toxic debt first. Insurance protection. Health, life, and property insurance protect you from major setbacks. Most people skip this step, and that's why their wealth collapses the first time life throws a curveball. Build the base first, and every dollar you invest after that will compound without fear. This is where safety begins. Once your foundation is set, you're ready to start climbing the investment ladder, risk-free and confident. Secure guaranteed returns, your safety layer. Once your foundation is solid, the first real investment step is guaranteed returns. These are investments that protect your money while generating predictable growth. You're not chasing massive returns here, you're building trust in your financial system. Some examples include high-yield savings accounts for short-term goals, certificates of deposit or government bonds that lock in small but guaranteed returns, employer retirement matches. If your company offers them, that's a 100% return right away. Think of this stage like building a wall around your financial base. You're protecting capital, earning steady interest, and creating a cushion against volatility. This step is not about excitement, it's about confidence. Wealth isn't built in chaos, it's built on certainty. When you start seeing money grow safely, your mindset shifts. You realize wealth isn't about luck, it's about order. Low risk, long-term investing, the core of wealth. Once you've got your safety layer, it's time to grow, and that starts with low risk, long-term investments. This is where you put your money to work intelligently, with patience. You're not trying to double your money overnight, you're compounding it steadily for years. Here's what this level looks like. Index funds. These track the overall market, spreading your money across hundreds of companies. They're diversified, simple, and proven to outperform most risky traders. ETFs. Exchange-traded funds. Similar to index funds, but more flexible and easy to buy or sell. Blue-chip dividend stocks. Companies that have paid steady dividends for decades. They may not skyrocket overnight, but they'll consistently pay you, even during market dips. At this level, time is your biggest ally. You let compound interest work its quiet magic. Every dollar you invest today multiplies while you sleep. If you want to build wealth without fear, this is your bread and butter. Stay consistent, reinvest your dividends, and ignore short-term noise. Over time, this core layer becomes your money machine. Real assets that build long-term security. Now that your investments are generating steady returns, it's time to diversify into real assets, the kind you can touch, hold, or use. The most powerful of these is real estate. Real estate has three advantages. It builds equity as property values rise. It provides cash flow if you rent it out. It gives you leverage, the ability to use other people's money, like a mortgage, to build your own wealth. But you don't need millions to start. You can begin small, a rental room, a duplex, or even a real estate investment trust, REIT, if you want a more hands-off approach. Real estate is slow and stable. It's a shield against inflation and a source of passive income. But it doesn't stop there. Real assets can also include things like farmland, gold, or business equipment. The key idea: you're investing in tangible value, not speculation. Once you reach this stage, your wealth stops being numbers on a screen. It becomes real, physical, and lasting. Build passive income streams. Once your core and real assets are established, the next move is to generate income that works without you. Passive income isn't a fantasy, it's a formula. You already have capital from your earlier steps. Now it's time to use that money to buy freedom. Some powerful passive income ideas include dividend stocks or ETFs that pay you regularly, real estate rentals that generate monthly cash flow, peer-to-peer lending or private credit where you act as the bank, digital products or small online businesses that earn while you sleep. The goal here is to make your money work harder than you do. Each stream might start small, but when combined, they can eventually replace your paycheck. This is where the financial game changes. You stop trading time for money, and your money starts paying for your time. It's the turning point from survival to freedom. Mid-risk growth, opportunities, smart leverage stage. Once you've built a strong base of safety, stability, and passive income, you can start to play smart offense. This is the stage where you take calculated, medium-risk moves not to gamble, but to accelerate growth. You might start your own small business or invest in one, buy undervalued real estate in emerging markets, explore private equity or pre-IPO opportunities, use options conservatively to hedge or enhance returns. The difference here is mindset. You're no longer depending on these for survival. You're using surplus capital to create exponential growth. If something goes wrong, your foundation stays intact. That's what separates the wealthy from the reckless. They take risks strategically, not emotionally. By this stage, you're not just preserving wealth, you're expanding it intelligently. Diversify internationally and protect your wealth. Wealthy people don't keep all their assets in one place. They spread risk globally. This doesn't mean hiding money offshore. It means being smart about diversification. Consider investing in international markets to reduce dependence on one economy, holding a portion of wealth in foreign currencies or precious metals, using legal tax optimization strategies to protect your gains. The goal is resilience. You're not just building wealth anymore, you're defending it from inflation, taxation, and instability. Because wealth that isn't protected is wealth that can vanish. This step ensures that no single event, a market crash, a currency drop, a political shift can erase what you've built. That's what financial maturity looks like. Safety on every level. Legacy investing, wealth that outlives you. Once your system is strong, the final step is legacy. This is where you think long-term, not just for yourself, but for your family, your future generations, and the causes you care about. Legacy investing can include trust funds that pass on wealth efficiently, charitable foundations or donations that align with your values, education funds for children or grandchildren, estate planning to minimize taxes and ensure a smooth transfer of assets. True wealth isn't just about living well, it's about leaving something meaningful behind. By this point, you've built a financial fortress, one that protects you, provides for others, and continues to grow even after you're gone. The secret ingredient: reinvestment. No matter where you are in the wealth ladder, there's one rule that applies forever. Reinvest your profits. Every time money comes in, whether it's dividends, rental income, or business profits, don't rush to spend it. Reinvest it into your next step up the ladder. That's how compounding becomes unstoppable. The poor spend their returns. The rich reinvest theirs. It's that simple and that powerful. When you reinvest, your wealth stops growing in a straight line and starts growing exponentially. That's how millionaires are quietly made. The ultimate mindset: patience and order. We've talked about all the steps, but there's one final truth you must internalize. Wealth is built slowly, safely, and deliberately. The right investment order isn't just a checklist, it's a philosophy. You start with stability, you grow with consistency, you protect with intelligence, and you expand with patience. Every time you skip a step, you add risk. But when you follow the order, wealth becomes inevitable. The formula is simple: foundation, safety, growth, income, leverage, protection, legacy. If you follow that path, you'll never fear money again. So, the next time someone tells you that you need to take big risks to get rich, remember this: the smartest investors don't gamble. They sequence. They don't ask, "What's the hottest investment right now?" They ask, "What's the right investment for me right now, at my stage?" Because that's how real wealth is built. Step by step, brick by brick, with zero panic and maximum purpose. If this video helped you see the path clearly, hit like, comment, wealth with wisdom below, and make sure to subscribe to Passive Income Pro for more smart strategies to build wealth the calm, safe, and intelligent way. Your financial freedom doesn't depend on luck, it depends on order. Thanks for watching, and I'll see you in the next video.